Hello and welcome to another edition of Analysts Insights. On this show, we are discussing capital markets issues, the developments on the markets, and how they're impacting investing on our local markets. So today I'm joined by Rufaro to discuss a number of issues. Welcome to Analysts Insights, Rufaro.
Thanks for having me, Ranga.
Thank you. So we are already in March, and the investment community obviously would know that this is the time that we are expecting financial results for the companies that are reporting year ends for the year ended 31 December. So in this case, 31 December 2022. So there are two issues that I would want to discuss, Rufaro. The first one is around your expectations on the upcoming earnings season in terms of the performances of various businesses, but also the accounting side. Today we have seen a statutory instrument or an announcement to the fact that inflation has to be looked at as blend that includes both the US dollar component and the Zim dollar component. So maybe to get us started, let's talk about that inflation issue and how that will possibly affect the earnings announcement and generally what you expect in terms of this current earnings season.
So I think it's a very interesting question. There's a big debate that has been raging in the analyst community over the last year, pretty much, about whether the economy is growing or shrinking. And depending on which indicators you use, some will argue that, look, the informal sector is growing. We're seeing more of the economy become dollarized. When you look at the numbers of consumer-facing businesses like Delta, and not the Zim dollar numbers that they report, but the actual numbers of beverages that they
volumes,
move, the volumes, you're seeing an uptick, which is only possible if the consumer has got more to spend, which is a proxy for growth in aggregate demand and GDP growth. So you have that school of thought that, look, in spite of all the negative numbers from in the national accounts from a Zim dollar perspective, there are all these other indicators that point to USD growth and the economy being more USD than Zim dollar, and therefore economic growth. And then the other school of thought says, look, any growth, even in the informal sector, will be captured somehow in the national accounts. Therefore, if the national accounts are not looking good, then it means the outlook and the economic growth is not looking good. So I've tended to be on the in the former school of thought that believes that if we see indications of growth in the US dollar economy and growth in consumption, then it means the economy is growing in a way that's not necessarily captured in the official numbers. So I think this reporting season is will give us great new data to renew that conversation. So to the extent that we're getting a new set of numbers, I don't think this pronouncement on in the SI is going to have a significant impact, because already we were getting inflation adjusted numbers that we're not using blended inflation. They were just using Zim dollars CPI inflation, and those numbers weren't very useful. So if you were looking at the financials of a company like Delta, you don't focus on the Zim dollar inflation adjusted figures. You focus on their reporting around hectoliters of lager beer, hectoliters of carbonated soft drinks, and the volumes. You get so much more meaning from the reporting about the volumes than the Zim dollar numbers, because the Zim dollar numbers are very difficult to make any sense of, especially from a comparative perspective. So I think that's what analysts are going to be looking for in this reporting. So if you're looking, they're going to be looking at the volumes, unit sales, and that's what's going to help them make decisions around, is there growth, is the company overvalued or undervalued, and that sort of thing.
So I think it makes sense the way you've put it across. So maybe in terms of the accounting, I don't know what it means from the accountant's point of view. When you've got a situation where 70%, 75% of trading activities is happening in a certain currency, but you are reporting in a currency that is only accounting for about 25% of your trading activity. What does it mean? Are we still in a hyperinflationary environment if only 25% of activity is being affected, whereas the rest of the 75% is actually happening in a stable currency? So I guess it's one of the questions that the market will be pondering over. I don't know how you'd respond to it, or maybe just say let's stick to the fundamentals, where we're just checking the volumes of production and sales, and then maybe forget about the dollars and cents.
Yeah, so I think what's been happening over the last few years is that the Zim dollar numbers that have been reported are not particularly useful. The analysts would prefer that the companies report in non-monetary ways, whether it's in US dollars or in unit sales. But I think the companies don't want to run afoul of regulators. They always want to be politically correct.
Okay.
So they will just stick to the reporting currency, which is the Zim dollar. Okay. But what a lot of analysts then do after the results are announced is they then engage management for supplementary information saying, yes, look, okay, fine, you've reported these numbers, you know, how much of it was in US dollars, how much of it was in Zim dollars, what are the unit sales in Zim dollars, what are the unit sales in US dollars, and then they create a model that is not affected by the problems of the reporting currency to build a valuation and form an opinion, you know, about the company. Is it cheap? Is it overvalued? You know, and that sort of thing.
So another area that I would want us to discuss is the Zimbabwe Stock Exchange, where the majority of the listed companies are. So those are the same companies that are seeing 75%, 80% of their revenues coming in as US dollars, but that market is still trading in ZWL. What needs to be done? Do you think a Zim dollar is still a good transacting currency for the ZSE, for shares of companies whose underlying businesses are now predominantly US dollars? What needs to be done, and for us to have some sort of a more acceptable situation?
So I think what we're going to see, I could be wrong, but my view over the next year is that there's going to be an exodus from the ZSE to the Victoria Falls Stock Exchange because of exactly the issues you've raised. How do you trade a company where 75% plus of its revenue and earnings are in hard currency, but the share price is in Zim dollars? And also the rules and regulations around the Zimbabwe Stock Exchange are very punitive for shareholders, particularly short-term shareholders and speculators. So, you know, and the rules around, there's been a lot more chopping and changing in terms of these rules and regulations on the ZSE than on the VFX. So that's why you don't see a lot of interest and excitement, or as much interest and excitement in the ZSE as, you know, 6 months ago before we had some of these issues. So I think there's going to be that migration. I don't know whether there's going to be a change in the framework to encourage new companies to list on the ZSE. But if we assume the status quo over the next 12 months, my expectation is that there's going to be an exodus from the ZSE to the VFX.
Yeah, but the biggest problem of the Victoria Falls Exchange at the moment is the lack of liquidity. So trading activity obviously is constrained because there is not enough money. And then it also begs the question that, so how is that possible if the economy is already 75% transacting in US dollars? How come we are still seeing some liquidity on the ZSE, which is a market which is trading Zim dollars, which yet we know that Zim dollars are actually becoming, Zim dollar transactions in the economy are becoming fewer and fewer. What exactly is happening? Is it a lack of liquidity issue, or it's a lack of confidence issue? Because I think the liquidity is captured by the amount of transaction that is happening in the economy. and we hear 75%. So if we've got 75% US dollars of us, 75% of transaction being US dollars, can we still make a valid liquidity issue on having the impact on the trading activity, or there's a confidence issue as well? People not wanting to party with their US dollars, buying stocks on the Victoria Falls Exchange.
So I think both are true.
Okay.
There's a liquidity issue and there's a confidence issue.
Okay.
So when we say that 76% of the economy is USD and the balance is in dollars, if we unpack that, 76%, most of that 76% of is actually informal.
Okay.
And pretty much 100% of the Zim dollar economy is formal.
Okay.
And the institutions that are most active in Zimbabwe on the ZSE are formal.
Okay.
So they generate a lot of their investable funds from the formal Zim dollar economy. And that's why the liquidity on the ZSE is significantly higher than the liquidity on the FIFEX. Okay. But we are in transition. If you look at that 76% number, it's a snapshot of where we are today. If you look at where we were a year ago, it was probably closer to 60%, 65%, and the year before that, it was even lower than that. Okay. So if we extrapolate that trend, we're going to get to a place where it's 90% plus USD and less than 10% informal.
Okay.
And what you'll start seeing is that the formal sector is going to have much more transactions in US dollars.
Okay.
And the capital market players whose investable funds were mostly Zim dollars are actually going to start participating in the US dollar economy and getting much more US dollar receipts. And we'll slowly start seeing that percolate into the Victoria Falls Stock Exchange. It's not unlike what we saw happen in 2009 when we dollarized and the market was reopened in February.
Okay.
The local capital market players didn't have US dollar liquidity. I mean, even the government itself was not paying civil servants in USD. They were giving them vouchers. But eventually, as they got more and more US dollar liquidity, by the second half of 2009, you saw quite a bit of liquidity.
Okay, coming onto the market.
So my view is that we're going to see a similar transition this year, where right now the volumes on the VFX are thin, the volumes on the ZSE are quite high, and I think we're in a transition as the economy continues to dollarize, and as more companies exit the ZSE for the VFX, you're going to see the volume on the VFX tick up.
Okay.
At the expense of volume
on the ZSE. Okay. Maybe just to the last issue that we can discuss as we close the show is on corporate activity or transaction. So this week we saw the CTC, I think Competition and Tariffs Commission, announcing that they'd approved the merger or the merger and acquisition transaction between CBZ and First Mutual Holdings. It's a transaction that has been there, that we know was being structured and had sort of been agreed on, waiting for this approval. In your assessment, good move? Bad?
Yeah, look, I think...
What do you make of this?
The argument for the merger is to create a behemoth of the scale of what we have already with Old Mutual and CABS, because CABS is one of the biggest commercial banks in the country. Old Mutual is the biggest life company in the country. So if you want to create a rival at that scale, I think the merger makes sense from that perspective. I'm surprised that it's actually taken this long. As you've indicated, we've been talking about this for almost 2 years now. I think it will make the capital markets and the insurance and banking space much more interesting. If you look at Zim compared to a market like South Africa or Zambia, we have many more licenses given the size of our economy, than those markets. So this consolidation, in a way, also makes sense from that perspective.
Or do you see that triggering even more consolidation amongst other players, or this is probably a once-off kind of thing? Do we need to consolidate more, or?
Look, I suspect it doesn't make sense for us to have as many licenses as we do, and I think that if this merger is executed well and they benefit from all the synergies and they become more competitive and they take more market share from the rest of the market, I think it will force the remaining smaller players to introspect and consider whether they can survive in their current incarnation, or whether they need to consolidate with other players to remain relevant.
Thanks so much to Faro for those segments, and to our viewers, we thank you so much for watching this show. Please comment on the comment section, and we want to hear from you what you think needs to happen on our markets, and what needs to improve, what you like, and what you think can be done better. Otherwise, thanks for watching, and see you next time.